Hey everybody, Chuck Barone here today. It is Thursday, February the 29th, 2024. Welcome to Leap Day. Happy Leap Day, everybody. We only get this once every 4 years. Great opportunity to do something special for yourself today. Maybe, party a little bit or celebrate or take some time to reflect on what you've done since the last leap year. It's a great opportunity. It's like finding an extra day to do something special for yourself. It's good. It's nice. Anyway, welcome to the show. As always, we thank you guys for your support. We appreciate you guys being here at this live telecast. We have no comments starting up yet, but I'm sure that'll come. We had a lot of funny ones yesterday. I enjoyed reading those. I'm just starting now to get the hang of doing the show and reading the messages at the same time. It's quite a difference. You guys might notice we have a new camera here today. We have new lighting set up, so hopefully the picture is much more clear. New microphone, new everything. So the show should be coming through nice, loud, and clear for you guys. Anyway, let's talk about these markets today. We all know that today was the big day we've been waiting for. We were going to get this PCE number today, the Fed's preferred inflation gauge. We got the number. I'm going to talk about that in detail here in a few minutes. In my opinion, the number was crappy, but the market's celebrating this number, right? So the market's rallying today, both the stock and the bond market rallying. You got the stock market, the Dow, up 47 points, 38,996. So about to cross over to 39,000 as the Dow approaches 40,000. The NASDAQ up 144 points today, 16,991 points. And the S&P up 26 points today to a new record, 5,096 on the S&P 500. So this was a broad market rally. Now the market's been kind of negative the last little bit, so a little bit of a bounce is not a surprise, regardless of the data that day. And you'll see today's data was kind of mixed. We're going to go through that after we do this little quick market report. So, the market data today, in my mind, didn't really justify any kind of rally, but the market took it like, well, this is what we were expecting. So they took it like it was good news. The bond market also rallies, not much. The 10-year down 2 basis points. And remember, prices go up, the yield number comes down, right? So both bonds, price of 10-year, 2-year going up, the price is going up. The yield's coming down, both down 2 bips today. The 10-year now sitting at 4.25%. The 2-year also falling 2 basis points, now at 4.63%. The bond market rallying on a high inflation number. Okay, this is all new stuff for me, guys. The dollar also had a pretty good day today, which is kind of in conflict with the stock and the bond market. The dollar rallying up 19 basis points on the index, now back above 104, 104.11 on the dollar index. Good strong number. And I think as the month progresses and we don't get this rate cut, you might see the dollar strengthening a little bit more even. Precious metals today, even with a rising dollar, going up. You had gold rallying $8.60, $2,043.60 for an ounce of gold. Silver rallies up 15 cents, $22.60 for an ounce of silver. Good solid numbers. I'm telling you, I cannot believe silver is not at 25 yet. I think that's going to be the next move you see. Will be silver rallying up to $25. Oil today coming back down a little bit, just small, down 39 cents, sitting at $78.15 for a barrel of West Texas Intermediate. I'm telling you guys, I really believe oil wants to trade between 70 and 75. It seems like that's where the chart is pointing to. We've had this little bit of a breakout. We've had several of these, but the market always seems to settle back down to between 70 and 75. And if I was a betting man, I'd be betting that happens again. Bitcoin continues to sizzle, up $1,853 today, now sitting at $61,930. Last time I checked, it was actually above $62,000 yesterday and today. Bitcoin on a roll, guys. I don't really see, you might see some profit taking here. And I'm hoping that this isn't the smart people selling to the not so smart people. But I don't really see any reason why this rally is going to quit right now. And Bitcoin, something to watch. All right, so let's talk about this market today. We knew we were going to get this PCE number. We knew it was not going to be, well, the market was expecting 0.3%. Can I say it like it is, guys? This number we got today sucks. Core PCE comes in 0.4% for January. Now that number, the market kind of went, well, that's kind of what we were expecting, so it's okay, and it's an anomaly, and they're going to justify it. That's why I was calling, shining a turd into a gold bar, which is impossible, right? But they want to try to make this into something good. Well, if you annualize that out, 0.4% times 12 months, you're getting almost 5% annually. That's just way, way, way too high. And I think now we can for sure rule out a rate cut coming this month, well, in March, starting tomorrow in March, when the Fed has their meeting between March 19 and 20. So now the market has to readjust its plays. They're talking about a rate cut in June rather than March. The market not even really going backwards with this news, which is kind of surprising. And really, in my mind, how much really is going to be different between March and June? Really. So I doubt we're going to see that cut coming up in June too. I don't see it, right? Now this 0.4% number we got today is the worst number, the highest inflation number we've seen on this index in about a year, right? Report also shows that annual inflation, now they added up the 12 months year over year from January to January, annual inflation coming in at 2.85%. Now this is a lot better than, almost 5, but it's still way too high. And Powell himself said that they want to see 6 months of good numbers before they think about cutting. Well, I guess we got to start the clock over again because this is not a good number. This is like, we've been seeing inflation kind of ratcheting up higher and higher. Not good news, guys. Not good news. So the Fed has quite a bit of work still to do to get this number down below 2% and keep it there, right? But at the same time, guys, the Fed walking a real tightrope here. It's a very fine line between keeping rates too high for too long, and now you get a recession out of it, right? Or cutting rates too soon, and you get more inflation. A very, very difficult, very, very difficult call to make. You really have to be able to basically see the future. And if I'm a betting man, if I'm going to gamble, I'm going to guess inflation is not going to get beat down to below 2% by June. It's just not. And as I've been saying and been getting flamed on a little bit here, the Federal Reserve is not just going to cut rates because people want them to. They're not, okay? Typically, rate cuts come when there's some type of economic difficulty, right? So, economic numbers are starting to go down. It looks like we might be moving into a recession, or we are in a recession. The Fed cuts rates to stimulate the economy, right? Well, when you have it where we are now, let's look at it for a second, okay? You got rates high. You got consumer debt at record levels. You got consumers struggling to just pay for groceries and the necessaries of life every day. So really, what do you get with a rate cut? Maybe businesses borrow a little more? Maybe. Businesses having their own difficulties right now, making money, but if they own real estate, they got some trouble, right? So, I got to tell you, man, it is really tough because I'm seeing things differently than the way the market's seeing things. And that always makes me a little bit nervous. Now, I like to be the contrarian. Typically when the herd is all heading one way, it's toward a cliff. So I like to be the guy going the other direction. This has got me a little nervous because the market seems to really be buying into this idea that the Fed's going to be able to just, do what they've done. It's not a lot, and get this number back down, put the genie back in the bottle, so to speak, right? And I'm not seeing that happening here, guys. The numbers have been all over the place. I don't think since this whole thing with raising rates started, we've really ever been anywhere near close to getting this number under 2% annually. So, what's their incentive to cut? Really? Because Wall Street wants it. Now, Wall Street does do a lot of political contributions, and I'm sure the Federal Reserve, as this election year moves closer to its culmination in November, I'm sure there's going to be tons of pressure on the Fed to raise rates, to cut rates, they're going to get a million different opinions depending on your political persuasion. And I'm going to guess the Republican side, taking on an incumbent president, wants the Fed to keep rates high so Biden doesn't get any kind of economic boost from a rate cut. The Democrats, of course, our friends on the left, always want rates lower because they want to help their poor constituency be able to borrow money and afford it. So we got all kind of little wheels turning, making the big wheel turn. And now these wheels are all kind of going in different directions. So the big wheel just kind of blindly moving forward saying, hey, things are great. Let's see if they really are, right? Now let's go to what I'm doing here is instead of talking about a couple of subjects at depth like I just did with this PCE number, I've been adding to the show this thing I call quickies or quick hits, just some economic data that you need to hear about. Then if you have questions about it, you can hit me up in the comments and questions, but I just don't want to go into a lot of detail because there's usually quite a bit of it every day, okay? So here's the news. Looks like the government has finally cut their deal to avoid the government shutdown. So I guess that they got till this weekend. So they got today and tomorrow to finish it. But it looks like we're not going to have a government shutdown. It looks like they've kind of have made this deal to keep the government functioning for a while. Now, you remember the last time this happened, there's a certain faction in the Republican Party got pretty pissed about putting this deal together, the last one with McCarthy, and ended up voting him out as Speaker of the House. So it'll be interesting this time around to see their reaction because obviously the Speaker had to make a deal with the other team to get this done. We'll see how that plays out politically. Personal income for U.S. consumers. Did you see this number, guys? It rose 1% in January. 1%. That's a 12% annual pace. It's unsustainable. It's not going to happen. They were expecting a 0.3% increase. A huge miss. Consumers actually making more money. Now, here's the deal. Sadly, that's inflationary too, right? Because people having more money to spend, typically they're not going to save it. They're going to spend it. It helps the GDP, also helps keep prices and inflation high. Spending. Consumer spending report comes out today. Consumer spending actually fell. Oh, man. What a world we're living in, right? Income's up, spending falls. I'd like to see this for a year in a row, where people are earning more money but spending less. That would tell me that people are kind of starting to do the right thing, hold on to some of their money, save some of their money for a rainy day, because that rainy day may get here any freaking second. So consumer spending falling, down 0.1%. So it's not down very much. They were expecting a 0.2% gain, a 2% increase in consumer spending. So they missed pretty big again. These analysts lately have not been even remotely accurate. So there you have it. Consumer spending down, consumer incomes up. We also had jobless claims come in today, coming in at 215,000, still a very good number. They were expecting 210,000, so a little higher than they expected. Usually they've been guessing high, and the numbers have been coming in lower, so this is a little bit different. It's up 13,000 from last week, but still not enough. You would need 285,000 for several weeks to signal job loss overall rather than job growth. Real estate pending sales. Guys, I've been telling you about how terrible things are in real estate. I'm going to do a little bit of a report on that coming up in the next couple of days. Real estate pending sales falling almost 5% last month. People can't buy. It's not that people don't want to buy houses. They can't afford to buy them with interest rates where they are. It's impossible. People can't afford it. So, not surprisingly, real estate sales falling. Bitcoin. Have you seen this, guys? I was reading this article today. Amazing. Now, you know about Bitcoin and what it does. Bitcoin mining companies. I didn't even realize it, but there are several of these companies that do Bitcoin mining. It's a thing. And these now are publicly traded companies. So these companies have been able to go public, sell stock to the public, making the owners of these companies hugely wealthy, I'm guessing. But listen to these numbers for these stocks this month in February. Mind-blowing numbers, guys. Marathon, up 47% in February. Iris Energy, up 48% in February. Riot, up 30% in February. And the king of the hill, Clean Spark, up 106% in February. Must be nice to have a stock that doubles in 1 month, right? So these are the thing here, guys. You Bitcoin players, Bitcoin's pretty pricey right now at over $60,000. This might be a way to get in the game and not have to spend as much, to have a shot in Bitcoin, another angle to approach Bitcoin from. And with these kind of numbers, that companies that are up this fast, with these kind of results, typically don't turn right around. And if it was one company, I'd say, okay, maybe whoever's selling the stock is pumping it a little bit. Doesn't look like it when all of them rallying like crazy, where the small fry only gained 30%. That's nuts. Anyway, guys, that's it for the day. An exciting day in these markets. We appreciate, I'm getting some comments finally. Yay. I don't know if they delay these comments coming in or what, but it's nice to see the comments starting. And I'm going to get better as we do this show live like this at reading the comments and answering the questions if you guys have them in real time. In the meantime, until I kind of get that get that down, hit me up in the comments section after the video is done and goes, into the recorded version comes up, and I'll answer your questions there. I've been responding to every comment and question. I promise you guys I'm going to continue to do that. We're going to make those changes to our webpage. A lot of new and exciting things coming up for the show to keep you guys engaged, to keep the community growing. That's it for the day, guys. We appreciate your support. Please check your subscriptions. I had actually a viewer yesterday hit me up, showed me he was unsubscribed and didn't do that himself. So make sure you check your subscription, hit the notifications so you get notified when we have something new coming out. Of course, hit the like button. We appreciate the change in the algorithms. And hit me up in the comments for your questions or your funny comments or anything else at all you guys might want to say. Anyway, guys, we appreciate your support. We'll be back tomorrow to wrap up this wild and crazy week. Until then, guys, take care. Thanks.